Good morning and good afternoon, everyone. Thank you very much for joining our MetaChat of today. And we are going to speak about lending market and the different challenges and solutions, possible solutions that we can take advantage of in order to cover these different challenges that this market can present or can have during 2023 year. For today, let me introduce myself. I'm Dario Calderon. I am part of MetaMap team. I've been working in technology companies for the last 22 years. And join me, my friends and colleagues, Samuel Aiza and Nicolás Echeguren. Samuel has been working with technology companies too for the last 14 years, I think. It's okay, that information, Samuel?
Yes, that's okay, Dario.
Okay, perfect. And he has been focused more than anything in the finance market. So that's the reason that he is going to be with us, supporting us in some different solutions that he can present about this market. And Nicolás Echeguren, who has been working with technology companies too for the last 10 years, probably. So the main topics that we have today, it's how we can incorporate the artificial intelligence in our market, in our finance and lending market, in order to speed up the processes and as I mentioned it, how we can take advantage of these different tools that we have, and also another products that we can find in the market in order to, of course, support the market and make easier the processes and another different events that the market can present. Of course, we are going to speak about how we can make benefits in the costs. And yeah, so before to jump to our first part of the session, I would like to remind you that you can use the questions button that you can see in the bottom part, in the right bottom part of our webinar tool, and you can ask any question that you might have. So we can answer the question as long as we move forward, but also our speakers can reply these questions too. So once again, thank you very much for joining the session, and I would like to give the word to my friend and colleague, Nicolás Echeguren.
Thank you so much for the introduction, Dario. Nice seeing everyone here and welcoming everyone to this MetaChat on lightning industry. And it was maybe a good idea to start off with the session title and the invitation that everyone here got for this MetaChat, and that is how the lending industry can overcome challenges based on data. And naturally, the first idea that comes into my head, at least when thinking about the lending industry and how to overcome different challenges in this space, will be artificial intelligence. I think we are all conscious of the revolution that's upcoming and that's been happening right now. So I think it might be interesting to take at least a couple of minutes to discuss AI and to discuss the different ways AI can enhance digital lending processes and essentially can help companies around the world to be much more efficient, much more effective at what they do. So the first point to mention here is that AI and machine learning, naturally, have been used in the financial services sector, I would say, for decades. This is definitely something not new. There are many models enabling digital lending companies to better underwrite loans, to be more efficient on the back end, and to improve fraud scores as well, using a wide variety of AI-based tools. This is something that most of you will definitely be familiar with. However, I would say that the main change in this AI trend that we are seeing in the past couple of years, and that's been accentuated in 2023, is that generative AI will be extremely different from previous legacy AI models in the sense that it can create net new content and not only analyze existing data or existing records rather than content. And this is the first trend here and one of the key challenges. And that would be how to leverage a large language model, which is an LLM, essentially what ChatGPT and other text-based models are consisting of. How you can use large amounts of data that are existing or that you can gather them in third-party sources to create a personal AI that is dedicated to your own company processes. So this ability to train LLMs in vast amounts of unstructured data, combined with essentially unlimited computational power, that is unlimited AI, and that's what's happening right now, could be, at least in my personal opinion, the biggest transformation that the financial services market has seen in decades. Um, and we're talking about a sector that in past revolutions, think internet, mobile, cloud, has been relatively lagged in adoption. It hasn't been the first industry, the first sector to adopt these new technologies. But I think that we might be seeing a change here because it changes that AI can embrace in this industry are essentially unlimited. So that's really what we'll be focusing on this first part of the session. We'll be taking a look at 5 different trends on how AI can transform the financial services world from 0 to 1. It's really a revolution that we're seeing, and I think these 5 trends will kind of reflect it. So the first big trend that we would like to discuss, and it's also a challenge in the sense that those who are able to uh, adopt the changes and adopt an AI uh, to really nail personalized customer experiences, and this will be the first big topic that we'll be discussing. They're going to probably eat the market in a way that we've seen it in previous revolutions. The financial services industry, although it's not a winner takes all market, I think it holds some degree of network effect in the sense that that product or that company that's able to offer the best data-based product and offer the most sensitive loan or financial product to our clients will most likely eat the biggest portion of the market share. Naturally, will grow positions in that industry. So we'll become the market leader eventually. So regarding personalized consumer experiences, we have one key challenge that is human-based models, as they are today, are quite unable to fully capture all the human and psychological context that influences financial decisions. So non-human based model is not yet able to provide advice or cross-sell or offer like better and different financial products in a way that helps a human make a proper trade-off in deciding whether to take a loan or not. A great example where this non-obvious human context matters is how consumers at the end of the month they prioritize paying bills. For example, during hard economic times, it's been studied that consumers will always prioritize paying their bills instead of like going and spending money in the street in things that they don't really need. And this tendency of like not always doing the smartest decision that is utility, and also like including some bits of social reputation and personal reputation, which are like non-utility or non-economic reasons to do a certain action. This interplay of both factors is what really makes it difficult for an AI-based model to really predict what the best decision for someone will be. And here lies the first challenge. If you're able to successfully introduce AI in a way that combines these 2 factors, right? Those logical decisions that humans sometimes do and non-logical, psychological, impulsive decisions, if you're able to understand that human context in making a financial decision, you can really capture that like you can capture all the feelings and the impulses that a human has so that you optimize what decision they will eventually be making. A similar challenge, I think, exists in modern wealth management and tax preparation. For example, human advisors always beat financial solutions like, that are automated, even those that are narrowly focused on specific asset classes, because humans are heavily influenced by this idiosyncratic hopes, dreams, and fears. So a financial advisor that's human and that's able to understand what's going on will be much more able and suited to tailor their advice for their clients better than most fintech systems. And in the other example, the case of taxes, even with the help of modern software, there's a very interesting statistic that Americans spend over 6 billion hours a year on their taxes. They make 12 million mistakes, and they often omit income or forgot a benefit that they were not aware of, such as potentially deducting work travel expenses. I don't know. So there's like a whole world of inefficiencies in both the tax preparation and wealth management industries that are poised to be revolutionized by AI as well. And the way this would work on a bottom line, and then opening the mic for everyone else to add in their comments or questions here, that LLMs, large language models, will provide a tidy solution to this problem. So if we are able to better understand and navigate what those financial decisions are being based on, and what's the context that also influences a decision to take a loan or not, if we are able to do that, these systems can answer questions like, why is part of my portfolio a municipal bond? Or why my split of stocks and bond is 80-20 instead of 50-50? You can also evaluate trade-offs. A user could ask, how should I think about duration versus yield, for example? Or can you build a plan that's flexible enough to help financially support my parents at some point in the future? So the main change here to finalize this is that these capabilities will transform consumer fintech and especially digital lending from a high value but narrowly focused set of use cases, which the ones that we know today essentially, to one that a super app, a super finance app, could help consumers optimize their entire financial lives. So essentially, the number of financial use cases that a fintech company could assist a consumer with will be essentially infinite. And that's, I think, a very interesting point to kick off a discussion here. I don't know, Samu or Dari, if you have anything to comment or anything that, in your experience, has been resonating with a more specific customer experience in this regard.
Thank you, Nico. Yeah, I was just thinking with the things that you were saying that, for example, here in MetaMap, we have seen some customers that right now are struggling a lot with it because, of course, that anyone and any industry wants to get more visibility on their customers because of data. But for example, lending, and if we remember how lending was created some years ago, was because the traditional banking system and the credits offered by the banks were very hard to get for companies and people, and that's why lending came very hard in the world. But you want to offer better loans and better benefits to your customers without increasing the risk. How can you analyze data? And we have seen several of those customers here in MetaMap because they are saying, hey, what happens if I get all the data of that customer, of that person, of that company? How can I analyze that company, right? How can I analyze that data, and what should I do with that data? And we have seen in another part of the world like Nigeria 1 month ago that the regulators are launching new rules to how they can share data between lenders and between companies and because it's sensitive information of the people, and that's something that really worries us, and we are working to improve how our customers are able to handle all that data, right, and being able to analyze that data. So this is what
Yeah,
we are.
I think it's interesting that you mentioned like data and regulations, and this is one of actually the points that we are going to be covering later, because the number of laws that are like coming into practice simultaneously in many markets that a company might be working in is getting out of control. And the worst part, or even the best part for some people, might be that these set of laws are not structured in a way that the whole rest of the regulations are. So this essentially leaves a lot of gray spaces for companies to operate in. And this is naturally a challenge. Think the loan officer, think a QA agent, or think anyone working in the financial services industry. How can you properly assess what financial product it is? It's better for a consumer if you yourself don't understand that regulation scheme that you're operating in. Like, how can you offer a mortgage product if you don't know if that complies with every single regulation of the markets that you operate in? And this problem of simultaneously operating in different markets and try to adapt your own personal offer to each one of those is a problem that we at MetaMap see happen every day with international clients. I mean, not only to work in South America, for example, but also in Africa and Asia as well, and Europe and North America. And the challenge here becomes how you can like adapt your product to comply to all of these different markets that you are operating in. I think this also leads us to the second trend related to AI and in the financial industry and sector, which is costs naturally, right? And when we talk about complying with different regulations worldwide, we're basically saying that the bandwidth required to fully comply with these markets is ever growing and will ever grow as long as we operate in a greater number of markets. So I like to think of this ideal world when I think of how reducing costs in the financial services world, where our friend Sally, or we can call him Sean as well, if he or she wanted to, let's say, buy a home and get a mortgage for that home, the ideal world will be that this person already has a pre-approved mortgage by the bank or the financial services provider, whatever that figure might be, right? Um, the ideal world would be that this person is continuously underwritten instead of the actual process, which is Sally or Sean. They go to the bank, they request a mortgage because they want to buy a home, and then a super long and complex process of pre-approvals, screenings, fraud scores, and so on and so forth will start to take place. This ideal world of continuously underwritten persons, we wouldn't have this sort of inefficiencies. However, there are three main reasons uh, why this world doesn't exist yet, in my opinion, and also these reasons and how they can be overcome by AI quite easily. And this is how AI comes again to solve one of the key challenges that the lending industry faces. These three problems, I would say, the first are that the information related to these customers and relevant information that is such as risk profiles, credit scores, um, IDs in government databases, background checks, and so on and so forth. All this information lives in multiple different databases, and they're spread all around the world. And it's super challenging and difficult to access this information in a way that cross-selling or predicting customer needs is easy and feasible for a financial services company. Number two, as we were discussing before, financial services are highly considered to be emotional purchases with often complex and hard to automate decision trees. This is where the emotional component kicks in. And essentially, at the end of the day, like a bank or a lending company will need to employ a large number of customer service agents that are constantly on the phone, on email, on contact with these customers, trying to figure out what is the best for them based on their individual situations. So all of this context that is not easily translated into data also needs to be taken into account if you want to offer the best product to a customer. And this is the second problem related to cost in the financial services world. And lastly, financial services are highly regulated. As Sam was mentioning, this means that human employees, essentially like loan officers, processors, must be in the loop with every single regulation that exists. And every single product, let's say mortgages, have to be compliant with complex and unstructured laws in many different countries if your company operates internationally, as many of them do. So how can AI solve all of this, and where lies the biggest challenge is that AI will be able to, number one, pull data from multiple locations. So it'll be able to go into a trade database, into a government database, and do this internationally and seamlessly and almost automatically. So as long as you can with the right kind of AI, you'll be able to connect to maybe dozens of different information sources. That would make problem number one, which is information lying in different databases at the same time, essentially a bit easier to solve. Number two, I think that understanding how these unstructured personal decisions about making a financial purchase or taking a loan or taking a mortgage, for example, AI will be much more suited than a human will be in understanding what all of these psychological factors are and how they come into play into making a financial decision. So, for example, you could put AI, train AI in a large language uh, model on a set of customer calls, if you're a bank, or chatbot interactions. Let's say we feed a large language model with 10 years of a chatbot's interactions. It'll be much more able to understand how that customer thinks in real life. And when they are able like to reach that point and to actually understand a customer better than a human will uh, ever be able to do, it'll be much more easy to take into account all of these psychological and non-logical aspects of decision making as well. And finally, understanding unstructured compliance law, you can fit like a whole set of regulations. Again, they don't have to be focused on one country, on one industry, just a matter of feeding that AI, feeding that large language model with this set of regulations in a way that it much better understand what's going on in a given market. Bottom line, and closing this cost aspect of AI and financial services section, I think that AI will solve these three key challenges around cost and how to make things for financial companies easier. Connecting different databases and solving this information process, this siloed information problem that we have in the present moment. Number two, it'll be much more suited to understand how emotional purchases work, understanding that complex and hard to automate context. And finally, complex regulations, ever growing and structured regulations that are applied internationally. AI will much better solve this challenge of understanding and offering products that comply with all of these regulations. Sam, Dari, do you want to add
Yeah,
anything?
I really love what you just said, and let me just add something. What we are seeing right now in the world, it's something that it's very different. The last 5 years are very different from the last 200 years on credit and loans history, and this is because you just said something very important. People was used to request a loan or something for mortgage, right? But right now we are in a generational change of population where it's not only sentiment that the reason that guides their purchase and how they travel and how they feel experiences, but it's what they do daily to work and to live. Because usually when you think about lending or credit, you think, hey, if lending it's easier than the traditional loans, you need to be able to deliver money without increasing the risk. But right now we have a lot of YouTubers, gig workers, and all these kind of people that generates income without a traditional work, right? So how do you measure the risk of that people if they work on social networks? Yesterday, I was requested to build a biography of me with information from my social networks. And I was very worried about, oh my God, I need to read all my LinkedIn, all my Facebook, all my Twitter. Uh, so what I did was using AI exactly to just input all my social networks. And I said, hey, build 2 paragraphs text with all the information that you can find in my social networks. And this is how lenders can analyze the risk of their new customers, right? Because if you think in the past, I want to request a loan for a mortgage for my house. I need to go to a branch store and sign some documents and deliver some information. But right now, maybe this person that is requesting the loan, it's in, I don't know, in China, and it's requesting a loan for Nigeria, and their fiscal address is in Latin America. So how this person can go to the place, right? So this is very important to what you just say.
Yeah, and I think that the advantage for a company that's able to untap of these markets is basically infinite. Think that you're a loan originating company based in Brazil that serves people in Latin America. Let's say if with the click of a finger you're able to serve the whole Indian market, the whole Asian market, the North American market, because now you have a solution that correctly integrates with all of these data sources and it's compliant with thousands of regulations all across the globe. The question comes to be why you shouldn't serve those markets if you have a product that's suited for that. So essentially the challenge is how to make your product available for all of those markets and really make use of a borderless economy, as we usually speak about in MENA, right? Because as long as you have the compliance, the regulatory framework solved, and you have a product that's able to serve people internationally, I think not taking that risk and not serving those markets is probably the biggest risk that you can possibly take.
There is something very important that you mentioned, Nico, in that last part, and it's about the cost, right? From my perspective, that's something that every company is pursuing all the time. How can I reduce the cost of my operation? And I like to think in the other way around. Is I don't need to reduce cost as well, but also what I can do is to it's to build the effectiveness in our cost. So if I have this tool that is helping me or supporting me to speed up my processes, if I can give to my collaborators a tool to make their job easier and speed and faster, you are going to get an effectiveness cost in your company. So it is important to take advantage of these tools that AI has for us and can apply in my market model and work with that. And it doesn't mean that the artificial intelligence is going to replace the human jobs. No, I'm not seeing in that way this part of the AI. I think it's the way that we can work with these tools that we have. And if I can make my processes faster than I did it before, I can have more people and in my company, more loans that I can approve if I can leverage my processes in this. So I think it's the way to be effective in the cost part in my company. So for me, it's a really good takeaway from this part of the talk.
Just to add something there, Dario, that word that you were trying to find is something that several companies have forgotten. It's not only about reduced costs or increased revenue, it's about being profitable. How you are profitable, selling more or selling less, but keep the numbers profitable.
Yeah,
Yes, yes.
in line what you were saying, Sam, before, and I think that you mentioned it as well. Risk management is also quite a big challenge for the financial services. I think it's always been because the whole business will revolve on how proficient you are at evaluating risks and offering a product that is in line with those risks that you're assessing. And it's quite funny to still be talking about risk management decades after the first collapses in the modern banking system happened, almost 1 century happened since the 29 crash in America in the 20th century, and that we're still talking about risk. Many of the audience members here will be familiar with the story of the London whale. For those who are not, this is essentially a trader that used to work for JP Morgan. And in 2012, a very weird thing happened. Essentially, the trading floor of JP Morgan lost billions of dollars because a bad trade happened. Let's put it that way. Let's simplify all the technical details in this operation. But essentially, you think of a very big company like JP Morgan, you think this is the 21st century, we are post the 2808 crash, so we should be handling risk pretty well by now. And this year, Silicon Valley in particular, have been examples that this is not really the case. Of course, you're familiar with what happened with Silicon Valley Bank, which is a much more recent example. And I think it becomes quite clear that risk management continues to be the key challenge for many of the leading financial institutions, regardless of how big they are or how established they are in markets. And while I think advances in AI are incapable of eliminating credit, markets, liquidity, and operational risks entirely, I personally believe that this technology can play a very significant role in helping financial institutions identify, plan for, and respond to those risks when they inevitably arise. I think tactically there are a couple of few areas I would like to highlight where I believe AI can help drive a more efficient and more responsible take on risk management. Number one, for example, is natural language processing. So large language models, uh, let's put the example of ChatGPT to make it a bit easier and relatable to everyone here, could help process large amounts of data. For example, news articles, market reports, analyst research. And this would essentially contribute to a more complete view on what's happening in a risk scenario. Many of the, well, a lot of analysts, when they are asked what happened with Silicon Valley Bank, they will most likely point to bad decision making on the same management, on like the company's management, and that they weren't able to foresee that a rise in interest rates would essentially render many of their investments much less profitable in the short and medium term, which is essentially what happened, right? So maybe an AI, a large language model, would have been able to much better predict that this high level, longer term trend in the American economy was eventually going to happen. Because remember, AI has the power of millions of the best financial analysts combined working in the same moment at the same time trying to solve the same question. So it's really strange that a large language model based on AI or based on ChatGPT wouldn't have been able to predict that a rise in interest rates would have unleashed all the financial hell that eventually happened. So this is only one of the ways that AI could help solve and mitigate these risks looking into the future. Number two, I think insights being provided in real time to the same employees in that company or to people making high level decisions in banks and financial services companies worldwide uh, could also give more visibility on what's going on with market conditions, geopolitical events, other risk factors as well could also be covered by these real time insights. Finally, I think that predictive analytics, and I think we touched on this point already, that is the ability to run significantly more complex scenarios in simulators that these companies are already using could provide early warnings as to what's going on, how to mitigate all these risks. Um, I don't know, Sam, can you maybe relate to a real life example in your experience working with financial services companies where uh, this problem of risk management and like a team with the big challenge of facing how do you assess the risk of a non verified employee, let's say a delivery app that hasn't doesn't have a credit history, doesn't have background history, doesn't have any financial behavior history whatsoever? How do you assess the risk for these people? Do you have an example you want to share with that?
Yes, for sure. And on the financial services industry, for example, there is a common one all over the world. And imagine all these companies that handle money, right? You have these persons that drive the bus and handle all the money in different stores and whatever. And a lot of times you don't know who they are. And imagine that you are just sent by MetaMap to a store, and your mission is to get $1 million and take it from one place to another. So I need to know who you are. I need to run a background check because, I mean, you have $1 million in your hands. What are you going to do with that $1 million? And of course, if this person, my mom used to say, the possibility makes the fraudster alive, because maybe you are an honest guy. You don't have a financial history. You don't have any background, bad information or whatever. But at that moment of your life, you're having issues, and you posted something on Facebook. You are having some health issues or some marriage issues or whatever, and you're having a bad time. Yeah. And then you have access to all this money. I know that you are not bad, but you have a necessity at that moment. And I couldn't predict what you need or what you are going to do, because I don't review your Facebook or your Twitter or whatever, where you're just saying, "Hey, I have this kind of illness and I'm very bad financially," and suddenly from one day to another, you have all this amount of money in your hands, and you need to take the decision to go to the office or take that money for you. And for the companies, it's very very hard to predict all these kind of scenarios where it's about an employee, or maybe it can be a vendor, right? Imagine that you are Walmart, and suddenly you have these three guys with guns in your store getting the money from the ATM. You have three guys with guns in a huge store with a huge amount of money. You need to predict the behavior of that vendor and that persons that are just threatening your customers, right? This is something very 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 important that the IA can handle in the real world right now.
Yeah, I think that verification of identity in the traditional process, in the human process, it could be a really, as Sam mentioned, it could be beyond the heavy paperwork. It could be not only that, but also how can I get the full history of this person, behind this person? How can I check all the backgrounds that I can that I need to consider before to approve a loan, or probably before to be sure that this person is who they are saying that they are. So it is important for these companies in the lending market to have a right tool or ability to prove the identity of the person. And as Sam said, not only about the what is happening in this moment, because sometimes when I have the paperwork for approval loan, I have the probably my job resume, probably my letter of the company that I am working with. But what happened before that? So I need to have the whole picture about this person. So it is important to count on a good background check process, I think.
Uh, Yeah, there's like a typical way that financial services companies address these problems when we're talking about risk management and how to really assess how big of danger you're taking when offering a product to these consumers that don't usually have a rich amount of information that you can easily access. Um, and like the way many companies solve this problem is building hard-coded rules and embedding those rules into risk management uh, models. Let me give you an example. So, anti-money laundering departments nowadays use systems that enable compliant officers to run rules like flag any transactions over 10K, or scan for suspicious activity in accounts with a balance higher than 50K or than 100K. Uh, the nature and essence of these hard-coded rules is not some random idea that these people had, but essentially goes back to the actual regulations, which that's basically all they say. They say that you have to identify a person that has more than X balance, or that does transactions bigger than X, Y, and Z amounts. And that's really the reason why these financial services companies are building all these hard-coded rules. However, there's a very interesting statistic that I recently learned, that is that despite that we're pouring billions of dollars into regulations and AML software and systems that should help us deal with all of this, we are only 3% effective in stopping criminal money laundering, which means that essentially all this money that we are investing in systems is not really tackling the definitive problem that's out there, and that is how do you properly identify risk. So the way AI could assist with sort of softening these hard-coded rules is, for example, taking a look at previous information about real theft, about real like money laundering, for example. And when you feed a large language model with all of this set of transactions, financial history, and contextual information as well, chances are that you will be much more efficient to effectively predict who is doing what, and essentially like lowering false positive and false negative rates. Of course, the impact that this would have on costs and avoiding fines, which is also a big issue for financial services companies nowadays, will definitely be solved, at least partly. On the other side, banks and financial companies nowadays employ thousands, hundreds, or dozens of people in the AML departments. And the only reason for them to be in those companies is actually monitoring transactions and trying to predict what's going to happen and who is a real thief, if you will, and who's not. So AI solving this problem almost instantly would mean that you would no longer need thousands of people in a company trying to predict what's going to happen, but also a large language model will be able to do it by themselves. There are many ways that this could be done, but efficient screening, predicting launderers, faster document analysis is also one of the things that you guys mentioned. Compliance departments are usually responsible for ensuring that your internal policies and procedures are followed, as well as adhering to regulatory requirements. That is, asking, for example, for the government ID or driving license or bank statement or really whatever. Uh, Generative AI, I think, can analyze these large volumes of documents instantly. Think contracts, reports, emails, uh, and automatically flag all of these potential issues much faster and efficiently. I think this is a good way to end this AI-centered part of our talk. We really uncovered a couple of the biggest trends that are going on in the sector nowadays. Um, Finally, I think that the key challenges to sum it all up, and let's move on to the next session of the talk, will be how to train a large language model with financial data. And I think bigger, more established companies do have a head start here because you do have lots of data you can feed an AI with. And this will be the key challenge for startup companies or incumbent companies in the financial services sector. How can you equal all of this data that large companies have without having them yourself? There are many ideas and many discussions that could be had around this topic, such as like buying data, connecting with third parties, and so on and so forth. I think that would be a conversation in and as of itself, but this really highlights how big of a challenge financial data will mean to smaller and incumbent companies.
There is something that I would like to mention, Nico, and it's how we can impact in different items of my company just changing this process. So I can impact the way that I can gather more people engaged with my company, and also how can I speed up the process of a loan? How can I prove the loans faster than before? How can be effective with the costs of my company, which is very important for everybody? And also, how can I count on the different regulations that every country has in order to approve these loans? So just changing this process inside my company, I am going to impact different KPIs that I have established. So it is good to give myself the opportunity to to see how can I improve my different KPIs. So for that, MetaMap has the opportunity for you who are seeing this MetaChat today, and is giving the opportunity to make a demo, a test demo with us. So you can contact one of our consultants, and they can make a demo for you. And also, you can reply the email that you got with the invite for this MetaChat, and one of our consultants is going to be in contact with you and schedule this demo. And also, if you prefer, you can go to the website and click on a bottom part that we have, which is said schedule a demo, and you can see how this can how we can support you to improve these KPIs. Not only one, but also another ones could be any KPI that you might have. So take the opportunity to see how we can take advantage of the data and the artificial intelligence, and how we can use this tool to improve every KPI that we might have.
Yeah, also just remembering that there is a space for questions. I think you can find it on the lower right side of the screen for most people here. And we'll be happy to answer any concerns or questions you have regarding the topic that we spoke about today.
In the meantime, Dario, Nico, I would love to close my participation here with you and our audience. Just reflecting with you about two paradigms that we have in lending industry. The first one that I was just reading the last week is 96% of lenders in the world analyze the risk and deliver money for the future with past information of their customers. I mean, they are analyzing the past to try to predict the future. But what about to being able to see the future of their customers, to predict the future of their financial behavior? That is the first paradigm. And the second one is always with data sharing. We see a lot of companies from every place in the world worried about where the information lives. And they said, okay, if I am a Brazilian, a Mexican, a Nigerian, an African, and an Asian lender, I would love to verify data, but I need that information in my country. The information today is everywhere, and that's the reason why MetaMap exists, and that's the reason why several companies exist out there, and that's why AI exists out there, because today it doesn't matter where the information is. And that's why, for example, we analyze or we get information directly from government databases, right? Because the information is in the country, is in Mexico, in Brazil, or whatever. And what we do is take some actions on that information and cross that information with some other information in other part of the world, and make AI being able to analyze that information and take some actions on that information without even worry about if the information is from one country or another, right? So today, the we have countries and we have political terms, but the truth is that the information is everywhere, all over the world, and we need to be able to analyze that information in real time, any place, anytime, right? So thank you very much for the invitation, guys, and I hope someone has some question or something to say here.
There is no questions, but I would like to add to that. I was reading the other day in the European Investment Bank website, and they said that, for instance, you somewhere was speaking about Africa market, financial market, and they were saying that it is important for banks and lending companies to transform to more digital. So, but keeping in mind that if you would like to be more digital, you need to keep your security, right? So it's the way that we can do it. So we have a lot of different third-party vendors who can check these identities, check the backgrounds, and check the past of a person. So it is important if you are thinking about how can I be more digital to keep your security and keep your processes secure. So it's the way that we can do it. So take advantage of this because we have it for you.
Okay, just one final comment while we are waiting for questions, if any. We'd like to mention that this video and the recording of this chat will be delivered to your email addresses. So you'll be able to listen to the recording and share with relevant colleagues as well, if interested. And also you can find us on LinkedIn, and you can find our expert consultants through our website. That's also a call to action for all those interested in learning more about the financial services industry and what MetaMap does to address some of the challenges that we discussed today. And this will be all for today. I don't know, Dario, if you have any closing comments.
No, just to say thank you very much, guys, for share the stage with me. Thank you very much for share your knowledge. Please keep in mind the takeaway is how we can take advantage of everything that is happening with the AI. And as I previously mentioned, it probably it's not the way that we can replace the human efforts, but also how can I give the tool to make our KPIs better. So thank you very much. Thank you very much to the audience. Thank you very much to everyone who joined and listen had what we had for everybody about the lending companies. And yeah, as Nico mentioned it, you are going to receive the email with the recording, and you can ask for the demo anytime that you would like to check. So thank you very much. Thank you very much, everyone. Have a great week.
Thanks, everyone.
Thank you, everyone.